It's happening. That housing crash of 2025, it's finally here. Take a look. The US housing market slowdown. This is an article by JP Morgan. You're seeing this happening as it did in 2022. Now I'm going to share a very big correlation of 2025 compared to 2022 and why this is very important. Take a look right here. The national median price remained stable compared to December at $400,000 in January. This right here is stating $400,000 in January of 2023, down from the record high of $449,000, essentially $450,000 in June of 2022. And that is negative 11%. The list price in 9 months, 8 months, went down 10% plus nationwide. Now I keep track of this in my local Utah housing market, and I want to show you guys the correlation. Take a look at this. Now here in the greater Salt Lake area, we actually peaked in May. Now the national housing market peaked in June. So you're seeing that the June was the record high. And Salt Lake City was one of the housing markets that appreciated the most prior to the pandemic and especially during the pandemic. Only Austin, Texas, and maybe Boise were ahead. So if you take a look here, the housing market peaked in June of 2022. And then the prices went down $50,000, upwards of 11%. And if you take a look at my housing market, the greater Salt Lake housing market, we see that the market peaked in May. Then we had 9 consecutive months of price drops all the way to January. Now in January, it was $510,000. That means the median home lost $90,000, almost $100,000 of value in the greater Salt Lake area, which was 15%. Essentially, the housing market nationwide was 10. And this is why it's important that you pick a real estate agent that understands what's going on, that's following the trends, that has this data, this information to share with you. That way you can look at the correlations, because this is the correlation that we're seeing compared to 2022. Price drops are back on the horizon, some pretty big ones potentially here coming up. So articles are coming out saying the US housing market slowdown. And then if you take a look over here, if you take a look at this Forbes article, housing market uncertainty reaches 3-year high, a Bank of America report finds. Now, 3, so 25 minus 3, ding, 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 2022. So there's another correlation. This is why you have to pay attention. What's happening with the macroeconomics nationwide and what's happening with the microeconomics locally where you're located, right? And if you're in a very, very big state, let's say Texas or California, you might have multiple major metro areas. That means that Texas or California could be Florida, right? Could be your macro, and micro is the city that you're living in. Anyway, if you're taking a look, you're seeing that the nationwide housing market is reaching a 3-year low or a 3-year high. The uncertainty or the market perception is at a 3-year low, going back to 2022, where we saw these big price drops. And if we go to this article over here, look at that. Another article resembling, so this is actually an article in 2022. Look at that, October 31st of 2022. 98 of the 100 largest housing markets saw prices nosedive in September from 2022 peaks. Now, if we're seeing a resemblance here, what articles coming out talking about recessions, talking about the slowdown in the housing market, we're knowing that inventory is going up, and I'll get to that in a bit. We're seeing that the housing market uncertainty reaches the lows that we saw in 2022, and inventory is now starting to pile up. Again, make sure you're working with an agent in your area that can share this stuff with you. That's not just going to fearmonger you, but actually show you what's going on in your housing market. And if they're not, if they don't know, interview a couple of them. Make sure you find somebody that actually understands what's going on, can share this with you so you're able to make good decisions. Right here, this is my local Greater Salt Lake housing market. If you take a look, this blue-purple line at the top, look how much more inventory there is than the years past. Now, I'm going to remove all these prior years, and what are you seeing? A big increase in this blue-purple line compared to the orange line at the bottom. Much more inventory year over year. Well, if we remove 2025 and 2024 and we pull up 21 and 22, look at that. What happened in the second half of 2022? You see much more elevated inventory compared to 2021. And under contracts are much lower right now than they were during the pandemics. That's true here locally in my housing market. It's true nationwide. And I do have a license. I've also sold real estate in Texas. That's true in Austin and in Houston. Those are two other cities that I've sold real estate in. And we're seeing inventory going up. And Austin, Texas is another one where inventory is much higher, where prices have taken a much bigger hit. And that one hasn't really recovered like some of the other ones have. The greater Salt Lake area has recovered somewhat. The Austin, Texas area really hasn't. And Houston was not hit as hard because the prices did not appreciate as much as those two. So in 2022, the three housing markets outside of California that were hit the hardest, number one, so your number one housing market that was hit was Austin, Texas. Number two was Boise, Idaho. And number three was Salt Lake City, Utah. So you're seeing that the housing markets that appreciated, they just skyrocketed. And these housing markets were appreciating extremely fast, where the average income wasn't able to support that average home price prior to the pandemic, let alone during the pandemic. And that's why you saw that. So you're seeing this correlation. Now, if we pull up 2024 and 2025, you're seeing that correlation with inventory increasing year over year at a substantial level, while we're seeing that the economy and the articles that are coming out are not that favorable to the housing market or the economy itself, right? And if we saw 98 of the 100 largest metros, prices were nosediving in the fall. Smash that like button, get this video in front of more people, and hit that subscribe button. That way you're notified when new videos come, because nobody else is going to be sharing this kind of data with you. That way you're actually able to figure out how to time the market, what you can actually do. And of course, timing something is extremely, extremely hard, but you can follow the data because patterns repeat themselves, and you can try to make an educated guess for yourself. Make sure you find yourself a real estate agent in your local area that's actually following the data, the trends, and it's not just fear-mongering you to buy. That way you're able to actually pay attention to what's going on and analyze the data with them. And essentially what happens here since 2022 is the housing market peaks in May, June, and then it starts transitioning in a lot of parts of the United States of America. That's true here in my local housing market. That's why you want to touch base with a real estate agent that understands the trends in the local housing market that you're in. But right there, you're seeing that active inventory. Now, the biggest key right here is this September 30th of 2025 deadline. And what is that? That is the foreclosures, the FHA foreclosures that have been put on hold for years and years. The Trump administration, at the end of President Trump's presidency, the first term, put this in place during the pandemic. And then the Biden administration kept extending this every single time they got the chance. Well, now we're back to the Trump presidency, and they're doing the exact same thing. So it doesn't matter who the president is, what administration is in there, the Democrat Party, the Republican Party, they're all abusing the system and not letting the free market, a true capitalist system, play out. So if you take a look, that's September 30th. Now, Biden, this was supposed to run its course January 1st of 2025. That was the last extension. Well, in October of 2024, Biden said we're going to extend this until April 30th. And then comes April 20th and Trump says, hey, we're going to actually extend this until September 30th. So until somebody stops extending this. Now, the only difference is when this comes around, September 30th, the credit rating of the United States with all three credit bureaus, just like we have our own credit score, has been downgraded. Moody's was the last one to do it. And if we continue printing money, adding to the national debt, they're going to continue downgrading the US credit score. And that means that to finance the debt, America has to pay more in interest, more money is going. So it's going to be extremely hard for them to continue printing this money, especially after Trump passed this big, beautiful bill that's going to add more to the deficit than any other bill that was passed prior to that. So it's going to be important what happens here in this deadline, September 30th of 2025. So September comes around, pay attention to what's going on. And what we're going to do is a recap here, right? So we're seeing correlations to 2022 when we saw the housing market drop 10% nationwide, 15% in Greater Salt Lake area, I believe it was 18% in Boise, Idaho, and 22% in Austin, Texas. So you're seeing not every market dropped the same amount. Nationwide, 10%. The ones that appreciated much quicker and faster, those ones were hit a little bit harder. And housing market slowdown, we're seeing that uncertainty is reaching back to those 2022 levels. We're seeing that the prices dropped right here from the highs that we had in June nationwide down to January of and December of 2022 and January 2023. We're seeing that 98 of the 100 largest housing markets saw prices nosedive in September. So could this be happening again based on all that data? And we're seeing this active listings in my local housing market and as well nationwide. Inventory is up year over year on the nationwide scale. And then this is the biggest one that we have to pay attention to, because if these foreclosures start hitting the market, that is going to have big impacts on what's going to happen, on what's going to come. And that would push prices to most likely continue falling into 2026. Make sure you subscribe, hit that like button, smash the subscribe button. You want to be notified when these videos drop. That way, you're up to date with the information that's readily available.